Welcome to Hong Kong and China Compliance Essentials, the podcast where we break down complex compliance, tax, and corporate matters for businesses operating in Hong Kong and China. I'm your host, Kristina Koehler-Coluccia, and today we're going to talk about something every new business in Hong Kong needs to know: Hong Kong tax basics, including profits tax, salaries tax, employers' tax returns, offshore profits tax exemptions, and filing obligations. If you've just started a business in Hong Kong, this episode will give you a clear understanding of your tax responsibilities so you can stay compliant and avoid unnecessary penalties. So let's start with the most important tax for businesses in Hong Kong, which is profits tax. In Hong Kong, profits tax is levied on the profits of a business arising in or derived from Hong Kong. The key point is that Hong Kong operates on a territorial basis, which means only profits sourced in Hong Kong are taxable. Income earned outside of Hong Kong, even if received by your company here, is generally not subject to Hong Kong profits tax. However, one does need to note a differentiation. If your entity in Hong Kong only has profits that are sourced outside of Hong Kong, but suddenly you have one transaction that is within the territory of Hong Kong, you will be liable for profits tax. The Hong Kong Inland Revenue Department will not separate what is onshore and what is offshore. Your entity has to either be offshore or onshore and offshore, and that type of entity is then taxable. For entities in Hong Kong, the current profits tax rate is 16.5%, while for unincorporated businesses like sole proprietorships or partnerships, the rate is 15%. For startups, there's good news. Hong Kong has a two-tiered profits tax regime. The first 2 million Hong Kong dollars of net profit is taxed at 8.25%, and the remainder at 16.5%. This can be a significant relief for small or newly incorporated businesses. Deductible expenses include rent, staff salaries, professional fees, general operating costs. Proper documentation is essential to support any deductions claimed. Now, as mentioned, there is something called offshore profits exemption. And this is particularly important for entities with international operations where your business is considered offshore, i.e., not within the territory of Hong Kong. If a company can demonstrate that their profits are fully derived outside of Hong Kong, these profits can be fully exempt from the Hong Kong profits tax. So to give you an example, if your company provides consulting services to clients exclusively in Europe or the US, and the work is performed outside Hong Kong, you may be eligible for offshore exemption. It is critical to maintain robust documentation, including contracts, invoices, and work records to substantiate the offshore nature of your income. The next one is salaries tax. Salaries tax applies to individuals on income derived from services rendered in Hong Kong, and this includes directors and employees. If you're a new business employing staff, you're responsible for reporting employee income to the Inland Revenue Department and providing relevant forms. Salaries tax is calculated on a progressive scale up to 17%, with personal allowances and deductions that can reduce taxable income. Deductions can include contributions to the Mandatory Provident Fund, charitable donations, and allowances for dependents. The next is the employer's tax return. Employers have a direct reporting obligation through Form IR56B, commonly called the employer's tax return. This form reports each employee's income, allowances, benefits, and termination payments if applicable. Employers must submit IR56B for each employee annually, and also in certain circumstances, such as when an employee commences or leaves employment, or when an employee is granted stock options or other benefits. Failing to file these forms on time can result in penalties, so it's crucial for employers to maintain accurate payroll records and submit the IR56B promptly. Now, if your Hong Kong company is newly established and you don't have any employees in Hong Kong or any employees abroad either that are employed by the Hong Kong entity, you still need to file an employer's tax return with a nil employee amount shown on it. So please keep that in mind. Even if you do have an entity in Hong Kong and you have no employees, you still have to file the employer's tax return. Now, let's look at filing obligations. For profits tax, the IRD issues a profits tax return annually. Typically, you must file within 1 month of issuance unless an extension is granted. Companies are required to prepare audited financial statements, which form the basis of the profits tax computation. For salaries tax, employees receive an individual tax return in early May. Employees are expected to submit it by early June or request a 1-month extension. Employers must provide the Form IR56B or the nil return detailing each employee's income and benefits. To give you some practical tips for new businesses. Number 1, make sure you keep proper records, invoices, receipts, payroll documents. 2, make sure you're meeting filing deadlines. Penalties will apply for late submission. 3, understand your accounting period. Most companies use a calendar year fiscal year, but other periods are possible as well. And number 4, seek professional support, especially in the early days of your new incorporation. Accountants and corporate service providers can save time and ensure compliance. And at the end of today's episode, I will highlight something we are offering to new entities, new companies, if they want to transfer their companies to us for maintenance. So to finish today's episode, let's look at some of the key takeaways. Hong Kong tax profits derived in Hong Kong at 16.5%, with the first 2 million Hong Kong dollars taxed at 8.25%. Salaries tax applies to income earned from services in Hong Kong with progressive rates and personal allowances. Employers must file employer tax returns for employees reporting the salaries, benefits, and allowances, but they also must file an employer's tax return with a nil filing if there are no employees. Businesses with international operations may qualify for the offshore profits exemption, meaning profits earned outside Hong Kong can be tax-free. As stipulated before, this is only for entities that have been doing 100% of their transactions and business offshore. Filing obligations include profits tax returns, individual tax returns, and employers' tax returns. And remember, accurate record keeping and professional advice are key to compliance. So if you have a Hong Kong company and you need help with tax compliance, we are offering a free handover and 1 year of free company secretarial and registered office services. This is a great opportunity to get professional support and make sure your company stays fully compliant without the hassle. If you are interested in this offer, please do email me. My contact details will be in the description below. And that's it for today's episode of Hong Kong and China Compliance Essentials. If you found this helpful, subscribe and share it with other entrepreneurs navigating the Hong Kong business environment. And we look forward to seeing you at our next episode. Thanks for listening, and remember, stay compliant.